The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 29 May 2020. Well, real brief on the stock market. The stock market is, I'm talking U.S. stock market now, is in a confirmed uptrend. And yes, there was a sell-off on Friday, but the weekly gains pretty much held. So regardless of what the fundamentals show, the market being overvalued in so many ways, nonetheless, you can't fight the tape, as they say. Market is in an uptrend. First story up, the S&P cuts Rolls-Royce credit rating to junk on the COVID-19 hit. Spoke about Rolls-Royce in last week's perspective and talking about it's not the automobile manufacturing. It has to do with Rolls-Royce aircraft engines. And of course, these big corps borrow and borrow and borrow, and they pretty much have availability to borrow no matter what the ups and downs of the economic situation is, but obviously can't go on forever. And with the hit that the airline industry has taken at large, S&P found it necessary, I guess, to cut their ratings. This is just a precursor to a lot of things that are changing, as we all know. Next up is another Reuters article. U.S. core capital goods orders shipments tumble in April. New orders for key U.S. made capital goods tumbled in April, and shipments declined, bolstering expectations that the CV crisis will lead to the deepest economic contraction in the second quarter since the Great Depression. So you're starting to see this come out more and more. I mean, Reuters is pretty mainstream. We know who owns it. And, you know, they're kind of prepping, I think, the public at large to be prepared for what's ahead. And what's ahead, folks, is going to be quite interesting. Very seldom do I do a weekly perspective without getting into Zero Hedge. And another great Zero Hedge article for your weekend reading. It's really not that long an article, but definitely can gather every word. Free speech and free markets go hand in hand. We have neither. Very well written. The basis is the headline. I won't read it to you, but it's amazing what really is taking place, and I'm sure a lot that follow my work are quite perturbed at what's really going on. But yet I do think that we have the ability to turn things around, believe it or not. Wolf Richter does great work. Wall Street. Week 10 of the U.S. labor market collapse, still getting worse at gut-wrenching pace, but signs of a bottom appear. I agree with Wolf. Has the collapsed U.S. labor market finally bottomed out? I would, or will have to get worse. Basically shows the increase of jobless claims, unemployed, etc. And you can read the article, but you can see that we will probably reach a bottom at some point, probably in the not too distant future, actually, as things are starting to open up in most states. But nonetheless, this is going to be a severe contraction with the labor market throughout the United States. And he breaks it down here by states. You can see the top 28 states by initial claims for unemployment claims. Referencing back to the first article I posted with the downgrading of Rolls-Royce debt, also from Reuters, American Airlines says to cut management and supply staff by 30%. Again, the airlines are basically decimated. I really think you're going to see not only a huge contraction in air travel, but I think you're going to see huge increases in prices. And a lot of these routes that the airlines had available, let's say just 6 months ago, are just going to go away. In fact, I'm looking at a flight that I've taken many, many times into the Southern Hemisphere, and the availabilities are much less than they were, again, just 6 months ago or so. Now, switching topics, this is from UPI. Headline, historic swarm of locusts descends upon India, destroying crops, something I've been jumping up and down about for several months now on these weekly perspectives. And that is, the food supply is diminishing as we speak and will continue to do so. And it's going to cause a lot of pain and agony throughout basically the entire planet. Some places, of course, harder hit than others. And basically, as the way the system is set now, it depends on how rich the country is, and not necessarily in food supply, because some rich food suppliers just can't eat their own supply. It's shipped off to the highest dollar. So it's basically based upon ability to pay for it. Anyway, India has experienced a historic swarm of locusts as the country also deals with the CV-19. Swarms of the desert locusts have descended upon portions of states, and I can't pronounce all these Indian names, so I won't. And while alerts were issued in the capital of Delhi, warning that the insects could arrive there. So devastation. I've been following this for a while. This is not a first one. It's been happening again and again and again. And the results are obviously detrimental to the human species. Right in line with the previous article, again from the UPI, UN warns 14 million in Latin America could go hungry due to pandemic. Well, pandemic, locusts, supply chain breakdown, weather conditions. I mean, there's a lot of factors that are moving into this situation, but the UN World Food Program warned that some 14 million people in Latin America could go hungry this year due to the coronavirus pandemic. The figures released late Wednesday for 11 countries in the region, including the Caribbean, suggest a substantial increase of some 10 million people suffering from severe food insecurity this year compared to the 3.4 million facing the same condition last year. There's been a lot of comments that are very recent due to Donald Trump's stance on the social media platforms, and this one from Charles Hugh Smith is absolutely worth your time. I'd read the whole thing, but I don't want to take that much time because I usually just give a brief overview of the articles I think you should be looking at for the weekend. But it is called Social Media's Plantation of the Mind. Reminds me of when I was on the Four Horsemen film, and Julian Tennant from Financial Times was asked about, the big picture and what controls kind of the money system. And I thought her answer was superb. She said it's the cognitive map. In other words, if you could control the thinking of people or how they think about money and get them, in my words, brainwashed, not hers, but if you control the cognitive map, her words, then you basically have got them. So as long as you can convince the majority, you don't have to get everybody. It's just that, if you're an outlier and say, no, this is money, or that's not real, or it's fake, or it's going to fail, or whatever, and the majority are like, what's he talking about? What's she saying? That's ridiculous. You've got them. So this is kind of a take from that perspective on the social media. And having worked on a plantation during the summer, he goes on to talk about in the classic plantation, everything is managed by those in charge to benefit the owners. Well, we kind of know that. And in the plantation economy, the company suppresses any innovation that threatens its monopoly, and the state enforces whatever means the corporation deploys. And this is just a superb article. It won't take you long to read. It will at least get you to think, depending no matter what side of the political structure you sit, stand, or yell. This is something to contemplate. So moving into the precious metals, this is from John Rubino. Again, a big shout out to John. Lots of time for John and what he's helped me with in the past, and we continue to have conversations from time to time. From dollarcollapse.com, John Rubino. Who's getting the biggest bailout? Believe it or not, it's the gold miners. With the exception of Amazon and Netflix, pretty much every big financial entity out there is lining up for a bailout, and governments everywhere are obliging. The European Union's latest relief package totals nearly $1 trillion. Japan, bigger, $1.1 trillion. Even the Swiss National Bank is adding to its tech stock portfolio. So he goes on and names all this stuff. So he goes on to say, and there's more persistent this worry, the more interested everyone, central banks, hedge funds, individuals, become in finding a place to hide out against a possible currency crisis. In other words, each new bailout strengthens the case for history's go-to safe haven asset, gold. This explains why, in the midst of a potential tsunami of deflationary defaults, the gold price is now at record levels nearly everywhere and is knocking on the door in the remaining exceptions like the U.S. and Switzerland. So in other words, gold is at all-time highs in every currency out there except the Swissy and the United States dollar. The rising gold price increases the miners' revenue, and operating costs, mainly labor and fuel, are flat to falling. The result, widening profit margins at a time when other sectors, from transport to hospitality to real estate, are seeing profits evaporate. So gold miners win twice, once in nominal terms as their earnings rise, and once in relative terms as their earnings outperform everyone else's. When the media figures this out, the coverage will be catchy. Here's a very early and relatively staid example. Newmont's earnings surged more than ninefold. Newmont, the world's largest gold miner, reported a more than ninefold rise in earnings in the first quarter thanks to higher gold prices and increased production from newly acquired mines. The Colorado-based company said net income had risen to $822 million in the 3 months to March 31st from $87 million in the same period a year earlier. The gold price is up 12% since the start of the years as investors seek safe haven assets while the coronavirus crisis wreaks havoc in other markets. So I think that's enough to read on that one. I will leave you there and move onward. And this time I think I left the best for last. I'm going to talk about silver, as I do usually at least one of the precious metals at the end of these weekly perspectives. And this is from Mining Technology. The title is Silver Faces Uncertain Future Due to the CV-19 Disruption. Global Data, written by Matthew Hall. So what's so interesting to me, I read the whole thing, is how much disruption there is on a per mineral basis. And on their statistics, I'm not saying that they're correct or agree with them, but basis this study, which is, I'd say, pretty decent in polite terms, silver's off 66% and uranium 32%. And those are the two largest. But as bad as the uranium disruption has been, the silver disruption is twice as big, 66%. And then you could go down the line: zinc, platinum, nickel, diamonds, copper, lead, and gold really only disrupted by 9%. So silver faces an uphill battle. Talks about what happened with Endeavor Silver. I won't read you that. Most of my paid readers are well familiar with it, or even if you're not, you probably know that story. If not, you can look it up. Prices in various base metals had risen at the very start of the year. Signs improved the U.S.-China trade relations. However, the spread of the CV-19 and anticipated impact on key user end segments, such as construction and manufacturing, led to sharp drops in prices. And they have a graph for that. Of the precious metals and PGMs, there was a sharp fall in mid-March. And you can continue reading the article. But I found it fascinating that silver actually got hit the worst, which is interesting because the safe haven demand for silver is obviously coming to the fore now. The gold-silver ratio has dropped from the 125-ish range down to below 100. And as I'm doing this weekly perspective, silver's up about 3% and gold's only up 1%, which is one of the many indicators that I watch to see that silver's actually come back into a bull market and confirming gold's move. And it looks like it is starting to do that, but we're still at a very high gold-silver ratio. Nonetheless, anyone that was brave enough or smart enough to catch that 125, 120, 115, 110, and made even a short trade out of it is probably pretty happy. The only way to really accomplish that would be in the synthetic market. You'd have to use derivatives to do that, and the physical market really isn't possible. There's a lot going on in the, really not behind the scenes, but you have to research a little bit. It's not that difficult. Samsung's really kind of leading the case for it, by the way. This is from them. Is silver the answer for solid-state cells? Samsung thinks so. The best lithium-ion cell for sale nowadays has around 670 watt-hours per L of energy density. You'd probably be aware of many advantages to solid-state batteries offer to electric vehicles, but if it also has a high energy density, would 900 watt-hours be enough? This is what Samsung researchers managed to get out of a most recent study. So basically, as I've not jokingly, I've kind of made it light and almost humorous with my particular breed of humor, but the idea is that if you really want to get anywhere with EVs or anything in the electronic world, you really want a silver-based battery. And I don't think this is going to be hidden much longer. I think a lot of people that want to have longer range and cell phone lives that go 5 days instead of 1 day are going to be looking at silver-based batteries. So I think there's going to be an increase in demand, not only on the safe haven status, but also on the technological side. And those will come together, meaning there'll be a synergy of demand on silver. So silver is inelastic on the demand side because so little is used per unit that it really has not much of an impact. For example, if you have a $500 cell phone and you use $1 worth of silver, if it went up 10 times, silver's price went up 10 times, you'd be talking $10 worth of silver. So instead of $1 out of 500, you've got $10 out of 500. It's inelastic. It doesn't really affect the overall cost of the product. Now, that's not to say that Samsung or whoever's manufacturing a quote-unquote silver-based product won't take advantage of that and mark up the price of the cell phone, for example. They probably will, but the true cost of the net product really isn't that significant whatsoever. So something to look at, something to think about. The silver story is not concluded. In fact, I think the next chapter in the silver story is just starting to open as I speak. Remember, there's nothing more powerful than the truth. The truth empowers you as well. Speak it. You don't have to speak it with authority, although speaking the truth is easily authority. If the AI only used truth, we'd be in a different situation instead of what the programmers determined to be their truth. That should be quote unquote our truth. I won't go any further than that this week. I wish everyone the best. Things are starting to open up here in Washington State. I trust that wherever you are, wherever you're taking this in, that you're making the best of the situation and staying upbeat, positive, and kind toward those that you meet, always and everywhere. I'll be back with you next week.